Welcome back to Investing Talk Podcast.
Today we're looking at IREN.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Okay, let's unpack this. I think most people who know IREN probably still think of them as just a Bitcoin mining company.
That's the old story, for sure.
But what we're looking at now is it's a massive strategic transformation. They're moving into high-performance computing, HPC.
Right. They're making a fundamental shift away from being, just tied to Bitcoin's price swings. They want to be a structural growth story in AI cloud services.
And the thing that's so striking is how fast the financials seem to be proving the pivot is working. I mean, this isn't just a press release. The numbers are. They're really taking off.
They're accelerating exponentially. And that's not an exaggeration.
So give us a sense of that acceleration. It sounds pretty dramatic.
Well, look at the full fiscal year 2025. Revenue was already a record for them at $501 million. That's a 168% increase year over year.
Which is already huge growth.
Already huge, but that was just the setup. The real pivot happened in the first quarter of fiscal 26. Revenue there surged 355% year over year.
Wow.
To $240.3 million.
So they did almost half of their entire previous year's revenue in just one single quarter. That is an insane rate of change.
It's explosive. And here's the most important part of that turnaround, the net income. In Q1 of fiscal 25, they had a loss, over $51 million.
Okay.
A year later, Q1 fiscal 26, that completely flipped to a record profit of $384.6 million.
That's not just an improvement. That's a totally different business model shining through.
Exactly. It's a structural change, and it's all thanks to that AI transition. And that change, it has a gigantic anchor. We have to talk about the Microsoft deal.
The $9.7 billion AI cloud contract. It's almost hard to wrap your head around that number for a company of this size.
It fundamentally changes everything. The scale, the perception, everything. I mean, this one contract is what's fueling the expectations for a $3.4 billion annualized revenue run rate by the end of 2026.
Just think about that. From hundreds of millions to a multi-billion-dollar run rate in, what, a year or two?
All driven by building out the infrastructure for that one AI contract.
A contract that big, though.
Yeah.
It brings up questions. How secure is it? I mean, for an investor, is there a risk that a deal like that, which relies on them getting all this future hardware, could get trimmed or even canceled?
That's a fair question, and it's a key risk to analyze. The exact clauses aren't public, of course, but the size and the multi-year nature of it suggests both sides are deeply locked in.
So it's mission critical for Microsoft.
It is. A hyperscaler like them needs to secure this kind of AI capacity. It's an arms race. And the fact that IREN is now spending billions in capital to get the GPUs, it shows you how symbiotic this relationship is.
Okay, so the upside is obviously massive if they pull it off. Which brings up the next question. How? How does a company that was in Bitcoin mining suddenly compete at this level?
Right, against the established giants.
Yeah. To justify a contract that big, they have to have a real competitive moat. What is it?
The moat is really on two levels, and they both tie back to vertical integration and power.
Let's start with energy.
The energy edge is everything in high-performance computing. IREN uses low-cost, renewable hydroelectric power for its data centers.
And why is that specific power source such a game changer in the AI space?
Because in this business, your power bill is like 40 to 60% of your entire operating expense. It's massive. So if your power is not just green, but way cheaper than a competitor, you have this incredible baked-in economic advantage.
And that cost advantage should show up directly in the margins. I mean, if the thesis is right, the margins should be jaw-dropping.
And they are. That's what validates the whole strategy. Gross profit margin already expanded to about 68% in fiscal 25. But here's the real kicker.
Okay.
The projected project EBITDA margins on that Microsoft contract, they're expecting them to hit an astonishing 85%.
Hold on, 85%. An 85% EBITDA margin? That's revolutionary. I mean, typical hyperscaler margins are, what, 50, maybe 60%?
Exactly. If they hit that number, it's not just an edge. It's definitive proof that their low-cost hydropower base is truly fundamentally disruptive.
It's the ultimate proof of the moat.
It is. It shows that even after you pay for all the expensive hardware, The savings on power are so huge that they can capture profitability that is almost unheard of in this space.
Okay, so beyond just cheap power, you mentioned a technology mode, something about proprietary liquid cooling. For a lot of us, data centers are just big rooms with AC. Why is cooling suddenly a big deal?
It's a huge deal because of the new AI chips. We're talking about hardware like NVIDIA's latest and greatest, the most powerful AI accelerators you can get. These things generate an unbelievable amount of heat.
So normal air conditioning just can't handle it.
Not even close. The chips would just overheat and shut down. It's a necessity. IREN has its own proprietary direct-to-chip liquid cooling systems.
Like a radiator for a computer chip.
A very high-tech one, yeah. It cycles coolant right over the processor. This tech is essential for packing these powerful chips so densely together, and it's not easy to just copy. It's a real barrier to entry.
And what about scale? Can they keep growing?
That's the other piece. Their secured power pipeline is substantial, and they've only used about 16% of it.
So there's a long runway for more deals.
A very long runway. They have the capacity to land more big hyperscaler contracts after this one.
Okay, that all sounds incredibly bullish.
Right.
Let's pivot to the bear case. This kind of aggressive growth can't be cheap. What's the price of admission here?
And this is the trade-off. This is what the market is trying to digest right now. To fund this whole AI pivot, specifically to go out and buy all those GPUs in a very tight market.
Yeah.
They recently did a massive capital raise between $3.6 and $4 billion.
$4 billion. That's a staggering number. And if I'm an investor, I hear new equity, and I immediately think dilution.
And you're right, too. The dilution is the key risk. But management's justification is that the money is directly tied to executing the contract.
They need it for the hardware.
They need it to deploy 10.9 thousand of those cutting-edge NVIDIA GPUs by December 2025. Without the cash, they can't buy the chips. And if they can't buy the chips, the whole thesis falls apart.
So it's a necessary evil. Take the dilution pain now to secure massive profits later.
It's exactly that, and it's why the stock has been weak recently. The market is focusing on the short-term pain of all those new shares hitting the market.
It's interesting, speaking of risk, how they manage their old Bitcoin business. It actually seems to lower the risk on their balance sheet.
It's a really smart move. A lot of crypto miners hold on to their Bitcoin, which basically makes them leveraged traders. They're exposed to huge price swings.
But IREN doesn't do that.
No, they practice daily liquidation, they mine the Bitcoin, and they immediately sell it for cash every single day.
So they're treating it like a utility, a predictable cash-generating machine.
Precisely. They don't carry the crypto risk on their balance sheet. It protects them and gives them a steady stream of cash they can then pour into the AI side of the business.
And is any of this cash flow coming back to shareholders yet? Dividends, buybacks?
No, not right now. Management is 100% focused on reinvestment. All the free cash is going into funding these high-return growth projects. They're estimating a 25 to 30% levered return just on the Microsoft deal. So for now, it's all about growth.
Okay, so let's look at the market. The fundamentals are compelling, but the stock chart has been all over the place.
Yeah, that's classic. It's what happens with a growth stock going through a huge pivot and a big capital raise. You have that insane rally first, right? Up 270, 300% year to date.
Fueled by the AI news.
Right. And then the pullback was it was inevitable. You had profit taking, and then the market had to digest that $4 billion funding news.
But has the sell-off broken the long-term trend? Is the technical picture still bullish?
For now, the structure looks sound. The stock is holding above a really key level, the 200-day moving average, which is around 33.67.
Which is a good sign.
It's a great sign. It suggests the long-term investors, the ones who believe the story, are still holding on despite the short-term noise.
And we're seeing that reflected in who is buying, right?
Yeah.
The smart money.
Absolutely. Institutional ownership is already at 41%. And more importantly, you're seeing cluster buying from specific funds. Barrel Capital, Hood River, Jane Street. These are sophisticated investors. They do their homework. When they start accumulating shares, it's a huge vote of confidence.
Okay, so if the thesis is sound, what's next? What are the key catalysts an investor should be watching for that will either prove or disprove this whole story?
It all comes down to execution now. And the first big test will be the next earnings report. The Q2 fiscal 26 report, which should be out in early February 2026. That is the critical inflection point.
And what do we need to see in that report, beyond just the headline numbers?
Two things specifically. One, We need to see sequential growth in that HPC and AI services revenue line. It has to be ramping up, proving the transition is real.
Huh?
And two, we need clarity on that capital. We need confirmation that they're hitting their GPU acquisition milestones, that they're on track to get those 10.9 thousand GPUs installed and running.
So proof that the billions they raised are actually turning into revenue-generating machines.
Exactly. And beyond that single report, you'll want to watch for any operational updates throughout the first quarter. Any news on GPU deployment, any new customer wins,
Yeah.
they'll all be fuel for the stock.
So what does this all mean for you, the listener? We've basically got a company in the middle of a massive shift, moving from a volatile commodity play into a structural AI infrastructure leader.
And it's all validated by this huge $9.7 billion contract and an operational moat built on cheap energy that could deliver 85% margins.
But the core tension is clear. The reward, if they execute, is enormous. Hitting a multi-billion-dollar run rate with those kinds of margins, it's a game changer.
But that success depends entirely on flawless execution. And on getting past the short-term dilution that the market is struggling with right now. It is a very high-stakes story.
This is a volatile stock, but the reward for successful execution is enormous. Make sure you monitor that HPC revenue acceleration and margin expansion in the upcoming reports. This strategic shift has positioned them uniquely in the AI race. Make sure you subscribe to Investing Talk podcast so you don't miss our next update on the AI infrastructure space.